Come back, guys. Welcome back to Ace Movement channel. Thank you so much for tuning in. So just before we get started, if you haven't subscribed to this channel as yet, please subscribe. Hit that subscribe button, hit that notification bell so that you can be notified anytime when I release a new video. Also, if you haven't smashed that like button as yet, please smash and destroy the like button. Let me see if I can get up to I want 30 likes. So I'm trying to get to 30 likes or more. So that would enable for the YouTube algorithm to reach more audience and for more people to watch and more viewers to watch my channel. And it's also a free way of supporting the channel. So just like, subscribe, and also comment and let me know what you want me to discuss on this channel so I can know what you guys like. Alright, so what we're going to talk about today is actually the huge correction in the stock and cryptocurrency market. So because of the rise in bonds, the 10-year treasury yield, that actually affected the stock market, with there being a huge sell-off in the stock market. Because what that happens is because of the rise of inflation and interest rate going up, people want to park their money in more safe haven asset and bonds. Because of higher interest in bonds, then high interest in bonds, investors would rather park their money into the bond market than the stock market because it seems more attractive, especially with less volatility going on. What does that mean? We might see more volatility if interest rate keep on rising, especially rising inflation. So the rising interest rate actually would help for people to stop borrowing more money and to keep inflation at a certain level, not making inflation go too up. So the rapid rise in bond yields had make the stock market looks like attractive, and that could be a factor with weeks ahead, going on to weeks ahead. So we will see more volatility coming, should see more volatility coming, and we can see that affecting the cryptocurrency market because people will be selling their cryptocurrency to put some of these in their money into the bond market as well. So Bitcoin was being at 57,000 high, has reached $47,000, $46,000. That's almost like a 30% drop. Same thing with Ethereum, which is all-time high of $2,000. So Ethereum was at its all-time high of $2,000, and what happened? It dropped almost a 30% correction right now. And we're seeing that more people are actually going to move from the Ethereum ecosystem because of the high gas fees and going to look for Ethereum alternative. And some Ethereum alternative right now that people are actually looking into is Binance. But I want to talk about what kind of other cryptocurrency out there that you can actually hedge against this effect of Ethereum. I strongly do believe that Ethereum has the potential to reach at least 10,000 by the end of this year, and I'm not just talking or coming up with a random number. There's many factors that I talk about in my previous channel that allowed me to come up with that figure. So but with saying that, Ethereum do have some problems, and those are problems that we need to address. So some of the problems that we see with Ethereum is the high gas fee that people have to pay for to do transaction, and that really affects users' profitability, and people want to find Ethereum alternative. Ethereum is actually trying to figure and sort this out as well, that's why they're releasing Ethereum 2.0, but that is going to take years to come to actually be fully implemented. But in the meantime, people are going to look for alternative. One of the alternative is that people are looking for is Binance. We've seen Binance at least $70 earlier this year, and now it's at $230. That's more than a 200% increase, I should say. But with Binance being more different. Binance is actually a fork off of Ethereum, and Binance have smart contract with Binance smart contract ecosystem. But would it be more centralized? Would people actually move to Binance because it's a centralized to get rid of the high gas fee? Yes, people would actually do that. But the con is it's a centralized system which is owned by Binance.com. It's a good token to have in your portfolio. I have it in my portfolio as well, and it's a good alternative. But what I want to talk about is that there's another alternative which is also you can use it as a hedge against Ethereum, and I've seen it as a good hedge against Ethereum, which I want to talk about a little bit about Cardano. Cardano has reached third place in the market cap right now. So with Cardano market cap being at least $43 billion, and the price for Cardano is $1.40, and that's almost a 50% increase from this week. So 50%. Cardano was at least at $90 and it's $1.90. It was at 90 cents, somewhere 90 cents this week, and now is at $1.42. And I do think that Cardano has a huge potential, especially with the Mary hard fork that's coming on next month, which means that Cardano can implement the same ecosystem as Ethereum, with native tokens being developed on Ethereum and with Cardano instead of Ethereum, and you see people moving from Ethereum into Cardano. And also with Gogen coming out earlier this year, Gogen coming out later in the future, and don't know the exact data yet, which people can have multi-assets on the Cardano ecosystem and build smart contract. So you see more DeFi ecosystem moving on to the Cardano system to get rid of some of the high congested network of Ethereum and the problems that Ethereum is currently facing right now. That's why I strongly do believe that Cardano is a hedge against Ethereum, and it being an Ethereum alternative with these kind of factors taking place right now. This is not financial advice. I'm not a financial advisor. This is for information, education, and entertainment purposes. Also, I just want to say, with interest rate rising, we're going to see a lot more volatility in the market, and a good way to, if you're having stocks right now or some blue chip stocks and they're falling in price, a good way to actually, good strategy to always take is actually dollar cost averaging. You can't go wrong with dollar cost averaging in terms of buying the dip. Just keep on buying the dip, buying the dip, buying the dip. You know, that's a good strategy to always implement. Binance token is actually at 4th in the market cap, coin market cap, and Cardano is third place. Cardano is at 3rd place. And another alternative is Polkadot. Polkadot is 6th place. Tether, no one cares about Tether, so don't even look at Tether. So Polkadot is actually behind Binance and Cardano. So if you want to look into these cryptocurrency, if you want me to do a standalone video on just Cardano, just let me know in the comment section. If you want a standalone video in Polkadot, just let me know in the comment section. And please like that like button if you haven't liked that like button already. Volatility coming in the stock market. You know, if you want to lock in some gains, you can do so by selling some of your cryptocurrency and locking in some gains, and also buying the dip. But that's hard to sometimes predict, so that's why I always work with buying the dip and just cross averaging every single dip that happens. And don't forget, but locking in gains is very important. My rule of thumb is that whenever I get at least 100%, 30 to 100% more in profit, I lock in some gains, and then whenever I dip, I take opportunity and buy in those dip. But you have to read the chart and doing some price analysis and technical analysis when you're doing those kind of stuff to implement those kind of strategies. Bitcoin being at this all-time high of 57,000 and dropping to 45,000 is very attractive right now. I'm gonna actually put some more Bitcoin in my portfolio, but just to let you guys know, and I'm being transparent, I do have Cardano in my portfolio, I do have Ethereum in my portfolio, and I do have Bitcoin in my portfolio. So that's some transparency right there that I want you guys to know. And I do think that that Bitcoin is going to rebound back to 57,000 and even reach a more all-time high, even test at 60,000 and then continue to rise further. I do believe that Bitcoin has the potential to go to 100k this year. If there's anything else you guys would like me to talk about, you want me to talk about, I do a standalone video on Polkadot, Cardano, then just let me know in the comment section below and I'll do those standalone videos. But for now, that's it, guys. That's all I want to touch on. Just to let you recap on certain things that I touch on. We're looking at Cardano as a good hedge in our portfolio, the hedge against the problems that Ethereum is currently facing, and Cardano is actually having those solutions and already implementing system that the same thing that people are talking about Ethereum, which is high congested, with networks being congested, high gas fees, it being too slow, the scalability issues, all these things that Ethereum is having right now. Cardano is coming out with mere hard fork and all those things, good stuff. But that's it for now, guys. I will be releasing another video coming out soon, so please, if you want to be notified with my weekly release, hit that subscribe button and click that notification bell, and like is a free way of supporting this channel. So, and I really appreciate you guys' support, and thank you so much, guys, for tuning into today's channel, and until next time.